Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Michael Sokoll. He's a Senior Managing Director with Nasdaq's Markets Intelligence Desk. It's after 2, it's a Friday, and that means it's time for the weekly market review with the mid. Thanks very much for joining us
Glad
today.
To be here.
What a week.
Yeah.
This is my favorite segment because I know it's all downhill from here.
Right.
So thanks for joining me today, Mike. Looks like the market's going to end slightly down to flattish this week.
Yeah, with all the noise and back and forth with tariff headlines and earnings, you end up with a pretty flat market at the end of the day. I think the Dow was down a little bit, but the S&P and the Russell slightly positive, so flat on the week.
Well, big story, of course, this week was Nasdaq listed Apple crossing that 1 trillion market cap threshold. In fact, you can see right behind me here that it's up just about 0.4% today over that 208 level.
Right.
So it seems to be that that momentum is sticking with the name.
Yeah, they kissed it yesterday and then dipped below it, then stayed above it for the close, and then today we're below it. But that 207 and 5 cents is your magic number.
Yes.
So above that today. Pretty impressive. I mean, a long-term story, as everybody knows, of incredible growth and what they've done there. Just $1 trillion is just an amazingly large number. I can't help myself, but it takes you 14 years in a jet plane going at the speed of sound to reel out dollar bills to get to $1 trillion.
Well, so it was interesting. I saw something on Twitter that I also thought was interesting yesterday too, that if Apple was to disperse the $1 trillion market cap, that each person on this planet would get $142.
Nice.
So I'm waiting for my check to come in the mail. But yeah, it was really cool watching the trading yesterday because I think 207.04 was that $1 trillion market, went to 05 and immediately down about $1, $1.50 after. And it was kind of almost like a self-fulfilling prophecy. You knew the shorts were going to come in there just because it was such a key level, and then it finished strong.
Yeah, they had a great earnings release this week, and people seem to have taken it. And keeping in mind, this is not a high PE company.
Exactly. It's not like the valuation's ridiculous. I mean, it makes sense.
Yeah.
All right. Well, let's move on and talk about the trade wars a little bit more in depth. We're seeing the Chinese currency weak on the day, and that's being attributed to the ongoing trade battles that are heating up between the U.S. and China.
Yeah, it's been weak. I mean, the trend has been over the last couple of weeks that it's been weakening, and that kind of goes hand in hand with the trade war rhetoric. I mean, the Chinese have a longer-term plan in that they want to make sure they don't have capital flight out of the country, and there's a lot of other things that they're trying to manage their currency. But they've allowed it to weaken over the last couple of weeks. Today was a little bit stronger in the morning. The People's Bank of China did something to make it a little bit harder to short the currency, which the market seemed to like. But for the most part, when you have tariff headlines and Chinese currency kind of going hand in hand, that's just a potential another headwind for the dollar if it keeps going stronger. Potentially more higher prices for U.S. consumers.
Now, with the companies that you talk to, we're going to get more of a read into this when the consumer staples and discretionary names start reporting over the next couple of weeks. How concerned do you think the market is in terms of growth? Because these tariffs are going to impact costs. We're seeing that in a number of sectors. It's going to trickle down somewhere. It has to. Yeah,
I mean, FactSet did a count, and through last Friday, the number of mentions on quarterly earnings calls was 70 for tariffs. It was 48 the quarter before, and it was 5 the quarter before that. So clearly it's in the minds of the executive suite. For the market, I think, is you have an interesting dichotomy. Earnings are up again this quarter, 20% or so, doing very well. So you have the near-term factor of the earnings doing well against something longer-term and harder to know for sure against the tariffs down the road. But certainly they would be an impact.
All right, and how about the 10-year? It's again flirting with that 3% number.
Yeah, through the beginning of the year it was flirting with 3%, and you had that whole Italy debacle, and it kind of came off, and now we're back there. What's happened in the meantime is you had a 4%, roughly GDP print. Was 4.1, and you also have pretty strong unemployment, pretty strong payrolls numbers. So all of that, the Fed is probably going to raise twice more, this year, and so that kind of portends higher rates, and that's where the 3 years just ticking higher.
All right, now let's wrap it up and look at the trading week ahead. It was heavy data this week, not so much next week, but you do have the PPI numbers coming out. I think there's a Fed speaker or two on the circuit, but the story continues to be earnings, and I think it's getting interesting. This is when we're going to start seeing these consumer names start to report.
Yes, so pretty light on the calendar, as you said. The S&P will start to kind of wind down. We're pretty done with the bigger companies, but you have a lot of smaller companies still to report. And yes, some of these more consumer names now, they're kind of a little bit off sync with their schedules, and they'll report, and be interesting to see what the consumer looks like based on what they're saying.
All right, well, thank you very much for joining me at MarketSite for the weekly review, and thank you for joining me throughout the week. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.